Let me know what's good, what's new. For this very day, it's like almost late evening, pre-party time for me after extremely thorough week of work for the Nest development. And here we are for the Nest Stream 5, for the Nest Stream number 5. And yeah, so there are a few short requirements. I mean, it should not take long. It should not take long for this stream, like 30-40 minutes approximately, I think. I hope so, at least. And I will try to cover as much as possible. Obviously, will not be able to cover all of the questions, but if you're having some questions, I will try to make it like a short Q&A at the end of the stream, just to make sure that we are on the same page. So definitely make sure to get your questions over the chat. And in the meantime, I'll be obviously checking the questions for priority wise for our members, and yeah. So let's go, and let's get like a very short glimpse for what's going on Bitcoin. Here we're having like the dominance chart. Let's launch let's launch where's that? Let's launch altcoin chart, altcoin cap as well. And let's launch this. What the heck? Bitcoin, right? So let's see what we can come up with. It was July, but it's not July anymore. Time is passing fucking fast. Yeah, so where is that? Okay, here we go. Don't you just love how LTC is doing after its halving? Yeah, so that's another option. I'll get all the questions covered later, don't worry. Okay, so where are we? I'll give it a very like a short brief view for what's going on each time frame. It will not be like perfect, obviously, for I will need to like hide some parts because the drawings or the technical projections are attached to 4 hour chart, and while here it's weekly. So definitely when always, just going what I'm always doing with starting the analysis for the market analysis for Bitcoin is practically starting from the high time frame, right? So I'm just going from top to bottom direction. Let's say we go top bottom, and from high time frames to low time frames, and starting with weekly chart. We can clearly say that we have already seen somewhat of a bullish reversal for mid-high time frame for the bullish momentum cross that occurred and practically got confirmed like last Sunday. That I hope it to confirm even more, and that I hope it to confirm even more the bullish cross. And actually, just start more of trend acceleration after the weekly confirmation, after the bullish close for the weekly candle, right? So we can assume that if weekly manages to close above, let's say 11k, this would be somewhat of of bullish overall, because we would establish simply the new high and close above the previous candle. But again, on the other hand, we are having some weekly open close price here, right? So damn, let me perhaps get it like hide this shit and just launch some painting miracle. Let me just put it like that, and it would be much easier, I hope. Here you go. I need to launch this shit. Sorry for my language, but I'm so chilled at the Friday evening, so let's go. So we are having some key open close level for the weekly, right? High time frame levels are obviously key, matter key importance, that they need to be marked every time. So we are having like this part to be important, definitely to be marked, right? So we are having like the open close resistance for the weekly, like open here was the close. Here was the let's get it thinner line. Here was the close price for the week. The next week got opened here and closed obviously here, which was the bearish week. Here we got actually, you know, just two levels marked for the reversal practically, and on low mid time frames we marked for the first time the higher low around 9100 that actually, you know, just resulted later in this whole rally, mid time frame rally from for $3,300, which obviously as it was very aggressive, right? Which was very aggressive bullish wise. And so yeah, we're having these levels, and we want definitely our candle to close as much, as high as possible to remain bearish, right? Sorry, to remain bullish. The key is that if we isolate a single candle, right? So there is, like, if we're having like a candle body, the open, let's say this is a white candle, so here we are having the open price, and we are having the close price, the bullish candle, and if we manage to close through the half of that practically, then this is more bullish than not. Okay, this is more bullish than not, but again, the higher it closes, the more bullish it gets, obviously. And so I would definitely want to see, like, to be more certain even about the bullish the correction officially, like having, you know, been closed already. Then I'd love to see this weekly candle closing above half of the distance, half of the weekly range for that, right? So if we're having like a weekly range for that, like right here, that I want our candle to close above the height of it, above the half of the height of it, half of the weekly range. And this would practically, you know, just confirm either way which part was practically, you know, the stronger part to the market, the bulls or bears, for the second part, like for the later part of the week, right? Because we started off the week with extremely bullish part that is a shaved bottom candle, right? That is a shaved bottom candle, which means that the open price, what is at the same time the price being minimal value, right? And which means that bulls were from the very beginning of the week, bulls were in complete control, launching and proceeding and following, actually, you know, just this mid time frame pump that occurred from 91 to 12.3. And yeah, so that's what I mean. Bigger picture looks badass bullish so far. Okay, looks badass bullish. We had this amazing strong, very bullish candle answer for the bullish engulfing, right? The bullish engulfing. I know, let's say Tom Dante is using bullish engulfing for whenever it takes place, wherever it takes place. Well, it doesn't matter whether it is up, you know, at the top of a cycle, or just, you know, at the bottom of the cycle. Some people would just still call it like a bullish or bearish engulfing. But for what Steve Nissen says for Japanese candlesticks, let's say study, which I totally recommend to have read on, is more that to be a bullish engulfing or bearish engulfing, you need to firstly have the trend established, right? So to speak of bullish engulfing, you need to have like a downtrend established. So you're having, and by what Steve Nissen practically studies for an engulfing candle, you need to have like a small bodied candle that can be like a spinning top. It doesn't matter too much for the inside color, okay, of the candle to be bearish or bullish, because spinning tops are usually about the market equilibrium, market like balance. So it usually doesn't matter too much what candle it is for the spinning top, for be it a doji, right, or be it a spinning top small bodied candle. And after that you have like a big ass candle being bullish, right? Completely. Here it would just open, perhaps lower than the close price, because if we close here, then it would just open here for another part. But if it closes here, if it's bearish crow close, right, for the spinning top, then we open our weekly our candle, our engulfing candle, and just launch it off with some big ass candle body, right? If it's bottom shaped or just close to bottom shaped without the weeks, up week and down week, then it's even more, let's say, decisive candle. It's even more well established candle, confirming the bulls or bears pressure. So quite well. So if you're having like a small candle and a big candle later, that is completely wrapping up the body of and the whole candle that was previously in the chart, then we can talk about bullish engulfing, right? On the opposite direction, if we are having, let's say, a bearish pattern, so we are practically need to have like a trend to reverse first, right? So if you're having like an uptrend, like a clear uptrend, and you are having like a usually again spinning top, small bodied candle, or just some kind of like a doji, right? And later you are having like some crazy bad candle that practically engulfs the body of the previous candle, right? So similar part, some people would call this setup, these two candles, to be at the top of the previous cycle, to be like bearish engulfing, and it depends. Again, I will not say that, because it is bearish engulfing in a way, because the candle actually, the black body engulfs like practically for as it says, the body of the previous candle, which leads to the conclusion that it partially is an engulfing formation. But again, gauging on Nissan's study, we would definitely want to see the greatest impact of the reversal formation based on engulfing pattern to consist of two candles. One of them would be small and the second would be big, the engulfing part, right? I hope it's clear so far. Let me just see if there are anything. Bah, that's good. Good. Dank chimichanga deal. I have no fucking idea what you're talking about. Okay, fair enough, guys. Fair enough. Remember, my friends, you can always tag me with hundreds of questions, and I will try to cover all these for you. So yeah, back to the chart. Where is that? Here. So yeah, this was quite well established bullish engulfing candle, right? We had like a not too much complex for the number of candles taken for the downtrend, but it was clearly a directional correction, right? So we had we had this uptrend, we had this short-term correction. So practically, I mean, short-term in bigger picture, because it was actually mid-term frame, right? Because the correction lasted like a couple of weeks, 1, 2, 3, 4, 5 weeks to actually just enclose the correction time and make new highs, right? So far, big picture is definitely bullish. This bullish cross that appeared here, and from anything that crosses, in terms of momentum, then like just a short note, that I would not be able to cover all of the oscillators, like philosophy and concept behind that, but oscillators are momentum based indicators, right? And momentum based means that you compare the most freshly closed candle and the candle over some period, right? So you would compare let's have it different color. So we would compare like freshly closed candle, like the close price for this weekly, and if you are having, I don't know, like 20 period cycles set for your settings for the momentum indicator, then you would take simply like previous like the pool of 20 candles, right? And you take on the pool the average, either weighted average, depending on the MA that the oscillator is very often used based on. You take an average price out of this part, and you are able to tell whether we are practically uptrending for the first close, based on the previous average of, let's say, X days, right? Or X, I don't know, sessions, weekly sessions here. And Yeah, and such bullish cross that appears on momentum means practically that bulls are, above the, are back above the trend presented by some moving average or average taken over some period, right? So if we spot such bullish cross on momentum or any oscillator on or RSI, or RSI, or if you add RSI or RSI, then it's practically, or just some moving averages, different modifications to that. You receive two lines. One is smoother than second is less smooth. Then you're having one line lagging, one indicator lagging, and the other is faster. And when the faster crosses, and you can easily tell that more smooth is the gray one, right? So this is a moving average run on the momentum oscillator here for the stochastic oscillator. By the way, 1433 are the settings for that. And yeah, whenever you see like a bullish cross, it means that bulls are getting like above the average trend, which means they are gaining the power to push the market again, right? So having done the big picture is a main determinant for me to be able to say that we definitely want to long it rather than short it. And I'm not sure if you can, I'll just post it here for the record. Where's that? Yeah, so we are having the answer definitely that for now, for current moment, the big picture is bullish. We are back in bullish mode after a few week correction. Okay, so that's it. The big picture is bullish for now. Then we move to smaller picture, just simply to be able to see for lower time frame plays, right? Whether to be it daily, be it midterm, be it 12 hours, or be it 4 hours, or whatever. And yeah, so taking let's say 12 hours, I'm personally using weekly 12 hours and 4 hours for main, let's say, determination for that, right? Determining, or I don't know, whatever. The daily is lagging version practically of 12 hours. So I definitely want to have for the weekly bigger picture, because I'm a mid-time frame swinger practically, but a scalper at times as well when the market conditions are good for altcoins, which these are completely not for now. That's why I'm not scalping this shit. But yeah, if I'm using, just for the mid-time frame, I'm using the weekly chart for the big picture, whether for the directional basis, for the directional basis and bias for whether we are uptrending or downtrending. And if we are uptrending, then I will be looking for longs, for mid-time frame longs, and then I switch to 12 hours for getting like a general context for the market nearby, simply to see like a local, like a more general context. And what I know that we are locally, let's say, uptrending or downtrending in the big picture of uptrend, that I know if this is a correction or just a trend expansion. And then I go and proceed to 4-hour chart to see the local context instead of general, to simply see where start printing my entry levels for longs, and when when I'm having like the big picture bullish on weekly, when I'm having you can easily tell that the bearish cross here on 12 hours. I'm not quite sure if we make use of that, but where is that? Can we just have it? Here we go. So we were having this bearish cross, which means that for the general context, in the big bullish context, we are having like a short correction for what's going on here after the bearish cross, right? And practically speaking, anything below, and because I'm a price action momentum trader, anything below the overbought zone, which is that from 80 to 100 points, is, and when it crosses, when these two lines cross each other in a bullish form, let's say, right, you get like a bullish cross for that. Anywhere below overbought zone, then it's clearly a long signal, right? Clearly a long signal for the mid-time frame swing, and you simply proceed to find the best entry for on lower time frames, right? So if I'm watching 12 hours for a local correction perhaps to come, here you can see easily that the trend here was perfectly held, the same part was happening practically here, right? When the trend actually, just expanded in an acceleration, in an accelerated way. Just simply it added to the momentum. Same was for that completely, right? So you can call that somewhat of a fractal, right? I'm not like a biggest fan of using fractal per the definition for what it says from the mathematical point of view. But yeah, we can definitely call it like a repetitive formula, repetitive pattern for the market, right? So we can definitely see. We can definitely see, guys, for where is that? Yeah, yo monkey. We can definitely see that this mid-time frame correction ongoing after 3.3 practically $1,000 swing that left many people behind waiting for the CME gap to close at around 8,500 that I wanted to go to them myself as well, obviously, which I didn't because I knew for more probable way to be to bear trap people that were just waiting there and made of this whole CME gap and more that was somewhere around here. That was more of a meme, right? And this was it. So yeah, same part for Nava gaps, right? There is a one gap from what I can remember, being a gap for where is that? For 10.8, right? And the more gaps you can see, definitely the more advanced trend it is, right? Because the trend, if there are more and more gaps, then it means that we are accelerating for the trap, for the gap, and for the traps as well at times. All good. Let me know, guys, if you can still hear me easily, if the connection is good or so. Go to hell, bro. What you need to see a weekly close to be bullish? Well, you can definitely rewind. You can definitely rewind this stream because I covered that already, right? But I want it definitely to close above half of it, right? I want to close above the half of the distance. That's what I mean, 50% here. If it closes above here, then I have practically no doubts because it should only add to the momentum and confirm it for the bullish bigger picture. So that's it. Probably it would be around like what the current market price or anything slightly lower to make it a bullish, like a typical bullish part, right? Because it should technically be bullish anyway if it closes. Above the previous close, right? So that's it. Where is that? Here's at 12 hours. Yeah. So what I said, we are having experiencing a short time frame correction after a strong exponential, practically, maybe not even exponential, but it was linear trend. Definitely, we got exponential more here, right? When you're having such a setup that is, chart trending practically and considering a support for the diagonal part, linear uptrend support, then this is linear part. But if the trends are practically getting more and more slope, then it's just simply going exponential, obviously. And yeah, for the previous times, you can easily see and say and notice that every time we go like an exponential rally after successful uptrending. So we are having some basis to claim that it is possible to establish new highs above 14K, right? I don't mind it personally, but again, because of it happened, I don't know, twice or many or more times, so far it has happened like that. A few times, it doesn't mean that this time it needs to be exactly the same, right? So that's another story. Good, no worries, all good. Austin. Yeah, so moving on to, we know that general context is of a correction after a strong exponential rally. Linear rally that may become exponential. The local context for 4 hours is practically symmetrical triangle that we can easily see that, right? Let me just, I don't know if I posted that actually for my members. Just for the record, here it goes. Here you go. Here you go, copy paste, or another shortcut, and what? That is not working. We need to go for that shit. Like, I hope this is a quite accessible and easy way to follow with what I'm drawing in that. So you are clearly having the symmetrical triangle, right? You're clearly having the symmetrical triangle, and I call it a symmetrical triangle not dependent because it is happening and occurring on 4-hour time frame, right? Which is the mid time frame. And I am personally not considering let's say very reliable patterns on 4 hours that would be like pennants, right? Because pennants, you need to realize the philosophy and the concept and the nature behind the pennant, because pennants are the patterns that happen after strong thrusts that people are taking profits near some key resistances, right? So if you're having, let's say, resistance here, right? And there is like a long entry here, let's say, and you know for a fact that there is a strong resistance, right, at 10.4. Then what? You're having a long entry, right? There is like a strong, for some reason, for fundamental reason, I don't know, whatever. There is like a strong thrust. You're having like this near resistance zone that is being kind of like loaded with short orders, because short orders under deposit and in the form of TPs, take profit points, and price levels practically. So as a matter of fact, you're not having like a just single price line to be acting as a resistance, but you're having like a whole zone, right? And the whole zone is usually a matter to be a normal distribution, right? Like a normal distribution. Google that for statistical research if you like, for what it means, if you're not aware of that. It's a statistical expression. But it means that majority of orders would be located at some or around some price level, and some key price level to make it like the strongest resistance, but the resistance is as well slightly above and slightly below. So people would naturally would rather to keep their risk limited and actually realize some profits. They'd rather sell it before it gets approached to, it approaches practically the resistance itself, right? So this is why it practically rejects some resistance located zone, right? And people just simply go for that and then just take profit, right? This is the first part. You're giving like a buyback quite fast because it's bullish after the strong up thrust. You're having like another part, right? And you're having practically like a consolidation form of bullish consolidation printing you a pennant pattern, right? And if it's printing you a pennant pattern, then you just simply know that there are very high chances that we would just practically just break out, retest it, and just proceed higher, right? This is for low time frames. And take profit, to take profit, to execute a take profit position order, it takes seconds, minutes, or hours, not necessarily weeks or months, right? You know what I'm saying? That's why I don't necessarily tolerate pennants to be considered on mid or anything higher than low time frame. But as long as 4 hours, is maybe somewhat acceptable at times, occasionally, then just for 12 hours and so, that it would just not work as a pennant, right? But for safety, to be more secure, I want to consider that firstly to be a triangle, right? For take profit points, if so, right? If you are a low time frame trader or mid time frame trader, then you would simply go for how it unfolds for the triangle, right? Because you technical range for the pennant is different than for the triangle. For the triangle, you're having the pennant, the range, the potential projected target based on the width or of the height of the highest swings, right? Of the key swings starting the triangle. While on pennant, you're having like the pole attached to that, and the height, the potential target for that is equal to the height of it, right? To the pole. While for the triangle, you're having like this part. So let's have it, maybe not T, because T was usually in physics for time, but let's have it like Y. So if it breaks out, it usually retests and proceeds to print an upthrust, right? And here we go, like a Y value for that. And same would be for the breakdown, right? And while pennants you play simply as continuation patterns, symmetrical triangle can be continuation pattern, but not necessarily, right? For the symmetrical triangles, you are having, I don't want to say like 50-50, right? Because we've been clearly uptrending, and we're having like greater chances for it to unfold in a bullish way. But still, I want to play, I would not play it very aggressively, but just wait for the breakout retest or breakdown retest, right? Because as far as this symmetrical triangle not being directional, let's say in any way, then I want to see where it unfolds first to be able to play that, right? So that's the whole point about it. But yeah, I'm definitely 100% more feeling good. Yeah. Feeling good about calling pennants for mid-time frame structures, or definitely high time frame. Where is that? Yeah, so I want to see how it unfolds, but it's taking into consideration bigger picture being bullish. I would definitely more, let's say, I would say that this is much more likely to unfold it in a bullish way than break out and retest it and just make it a long opportunity for late longs there to be somewhat safe, and proceed to 12.8 resistance. That would be the mid time frame resistance, as it says here, after we break out above this pivotal zone, right? And so yeah, that's the resistance, because practically it was the last support. Like there's this main paradigm that broken support becomes the resistance and broken resistance becomes the support, right? So if the last support before like a very strong down thrust, breakdown of the structure, like it was here practically, then it was the previous support that got broken and resulted hence in a big sell-off, then it means that it was a key support, if it was, because it happened like that, right? And if it was a key support and it got broken, then it naturally became the key resistance in sense. I think it's very logical. And yeah, so that's my part. I would not even go for our 1 hour chart, because we need to trade that. We need to trade that and see how it unfolds for the triangles. So not sense even going for the 1 hour. For the dominance, you can see it's ripping us off, right? You can see it going exponential. This is what you call exponential, when the slopes, when the angles to the horizontal parts are getting greater and greater, then you're practically going an exponential rally, right? Some people call it parabolic. I'm not a big fan of calling it parabolic, because it would be like a half of a parabola. Like, I'm an engineer myself, and that's my that's my good and bad side, that I'm always like trying to pay much attention to what it means. If people say parabola, then to me they should mean the parabola, not just like some exponential part, right? So simply the longer it takes, the higher it goes, with more aggressive way. This is what you consider for a trend to be an exponential part. 71% means of market capitalization means that the remaining part of 2869 would be would be for altcoins, right? So it means that practically Bitcoin is twice as much dominating the whole market as altcoins, right? So it means that out of 3 people, 2 of them would be trading Bitcoin practically for their capital that they're managing over the altcoins. So it means to me clearly, in a clear directional way, that that people definitely are not feeling good about trading altcoins right now. And well, it happens. It happens on strong exponential rallies. It happens on strong exponential rallies for Bitcoin usually, right? And so that's what I mean. I mean, when Bitcoin like just was oscillating to 3 to 4K, and later that it shoot up to 5 on the April the 1st. From what I can remember, for the April Fool's joke. So the whole bull market is an April Fool's joke. Then all of that practically, as you can see, it was going exponential for Bitcoin in the bigger picture so far. Definitely linear, because the trends were practically accelerating, but you can tell that by the dominance as well, right? So if the dominance is ripping off, then it's simply just more bullish than not for Bitcoin and bearish for altcoins, that you can easily see and tell by the big time frame chart, perhaps daily, for it was in eco. That's weird. Yeah, where's that? What's that part? That's some old chart. Yeah, so you see the daily part here. Obviously this trend should be adjusted. Okay, we go like a tiny acceleration here, I believe, as well. Where is that? Here we got it. Yeah, so even if we get it like a very proper part for that, for the market, for how altcoin market looks like, I will not be feeling comfortable working with altcoins right now too much, right? Apart from some different exceptions, small exceptions, for like gems, for our bulletin or so. This is like another story, because there's a long time frame, big opportunity peaks. But for the Birdness bulletin, I mean, obviously. But yeah, I would not be feeling comfortable trading something that's just broken the trend, that's just broken the uptrend here for the market capitalization, right? And what else to say? It looks like shit. It's tanking a lot so far. Like the daily fluctuations, as you can see, are pretty significant. Okay, so, and we are definitely in low time frame downtrend for altcoins. For Bitcoin, simply taking over the dominance and the whole crypto sphere for the volatility, because it's very logical as well, because people chase the volatility, because the volatility is what makes you money. So if they choose between Bitcoin, that is, they will always go for more volatile assets. This is like a market paradigm, simply because it would just at least for retail traders, and this is what just prints more money. And retail traders tend to be small portfolio traders, tend to be more greedy, and hence take more less averse to high risk, and more probable, more likely to go and lose all the money on bad risky debts, right? And than just big, I don't know, hedge funds or some whales that are experienced already in markets. Yeah, but I would say it does look definitely for this part to be depression, right? And as far as this part looks to be a depression, in late December 2018, we were just uptrending for the market capitalization. The capital was inflowing into the market valuation for crypto, was for altcoins was increasing, and we peaked around here, right? We peaked around here, which we already has corrected since for about like 33% to the bottom, and for around 32% for now, right? Which is quite significant part. But I will not be comfortable building any other position than high time frame position, which I am not like I'm not a fundamental trader. I'm not a positional trader. I'm usually trading swings, and I'm trading what brings me money, and my Bitcoin brings me money. So I'm mostly playing Bitcoin USD parts than altcoins. So that's like for this short breakdown. Let's see if there are any questions for general. Nope. For this part, nope. Let me just check it on my Twitter as well for perhaps there are any questions. On the tweet, let's see. Not really. Okay, so yeah, this is how it looks for altcoins. This is how it looks for Bitcoin. This is how it looks for the dominance as well, right? So just to wrap it up, I would not be feeling. Oh, thank you for the engagement. Congratulations, I appreciate it. Welcome to the club. So congrats to you, bro, as well for whatever it was, whenever it was. Yeah. So what else? I think we covered that. We covered these parts. So let's see how to get in after breakout if there is no retest. Then you just go and buy the next retest. I mean, you can obviously buy the breakout, but this is simply more risky. And if you are applying like good risk management strategies, let's say if you keep your risk under 2 or 3% per trade, or you're simply just position sizing that properly beforehand, right? Then you are practically protected enough to be able to take whatever trade you wish, because you will not lose much anyway if it's all practically well arranged, right? So you can buy the breakout, you can buy the breakdown, you can sell the breakdown, but so at times it happens, at times it doesn't happen, right? And this is all part of a game. In case it doesn't happen, you just simply go as low as possible, and that's all. I am the momentum trader, so I trade momentum. So when I see momentum is oversold and downtrending, then I am buying like low time frame reversals on momentum. That's it. CNH and BTC correlation. I don't know what you're talking about, Javier. The CNH. No idea, to be honest. What's that? Okay, so let me know last two questions, and we can definitely be putting like some final comments on that perhaps. Are there ever any conditions that would make you enter before the retest? Sure. Like the conditions are that you are protecting your capital well, which means that you're not getting more risk than it's what's usually considered to be safe by traders, by investors, to be 2 or 3% of your account, which means that put into the risk for the trade, which means that if a trade loses on a stop loss, right? If your stop loss gets hit, that you would be losing like 2 or 3% of your account. So obviously the less you lose, the better, right? And so that's my answer. That's my answer to that practically. But yeah, I mean, for the reason could go exponential down. I mean, it's been going exponential down for a long time already, bro. So I mean, we can load it, but well, there's not much to check in, to be honest. It's been downtrending, right? If you go reversed exponential part, I mean not reverse mathematical way, but if you can see clearly that the trend is accelerating, that the sell-off is accelerating, you're making a lower swings, lower downswings in where you have it, like that. You're having like a trend acceleration downwards, clearly, right? the slope is getting more aggressive for that sell if it means that we haven't already trading exponential part, right? Here, take this part and take this all this shit that's happened below. So it is clearly exponential. I don't know. I mean, it can only go more vertical, straight to hell than that, right? I hope it covers that. It is not linear at all. It is not linear at all for the reason that I mentioned. It would, if it was linear, then it would be something like that, okay? But you're practically having more and more acceleration to add it to the bearish momentum, right? So that's out of question that this is not linear. Yeah. So what else? Let me know some two more questions in the what's that in the chat. Let's see if we are having everybody tag last question. Go for that, guys. Sure, you're more than welcome. Yeah, sure. So by the way, I'm not sure you know that we launched like the previous 2 months. In June we launched successfully our website that you can easily check our bulletin as well. Sorry, our bulletin too, but our free Medium that you can go and read some badass articles from Benjamin from our fundamental team. Like I cannot really express more satisfaction for how talented they are for the articles that they provide. Just simply go and visit the Berbness Medium, right? And it would be like a best thing you can do while waiting for altcoin trades. You can easily just go and see amazing projects for altcoins. I mean, for high time frame that could be used, to get a glimpse for what's worth to invest. No risk, no gain, definitely. But again, let's risk, always risk not more than you can afford to lose, right? This is, I hope it's quite goes without saying practically. We will be expanding our website too soon. Adding courses, let's say trading courses for trading quizzes, trading competitions. To become better traders. Obviously, you can join the Discord for us, which you're all more than welcome to do so. Just simply go theberbness.com and scroll down to Discord and click on that. You can as well easily go for the Berbness YouTube that I pointed you to. Get the testimonials. Obviously, you can join our exclusive memberships. I don't know if you're aware of that. You can always go for the bulletin that we launched yesterday, for the modular packages for $10, for trading therapy with our PhD certified psychologist, where you can go for one-on-one therapy sessions. I mean, there is no other group in the world practically offering that unique value to clients for $10. A weekend chatting school, like complete educational video course for technical analysis, which I am practically uploading the third episode already on our YouTube for our members, all of them for $10. I mean, just simply go and research. We're having, obviously, these are the only additives, like add-ons to additive module packages to our main subscription plans. Let's say Nest Club, private mentoring that you can obviously always sign up to be led individually by me for individually tailor-made arranged strategies for growth for your portfolio, calls only package, forex part as well. And here soon, very soon, you would be able to see very new features. As I said, an integration with courses that you could go for quizzes to test your knowledge. So the website will be becoming more and more interactive, definitely. And at what level of dominance would you consider entering into alts? Well, it's not about the level of dominance. Well, like the sky's the limit. I mean, it cannot go higher than 100% SUPI, right? So if it goes 100%, I would go there. buyouts, simply. If there is anything to buy left, because people would just crush the market. Now, okay, one last chart, XRP, simply, and very short scan, and we are closing the stream for today. XRP. I'm not a big fan of XRP for fundamental reasons, practically. So you will not hear too many good things about it from me. But technical wise, there's no surprise as well. It's been exponentially downtrending for some time already. Okay, since practically, like we have been in uptrend practically since the top in 2018, right? And we just broke. This year we broke key support that practically, just got rid of half of the market investors and supporters for XRP, making an XRP army. And we have retested the support breakdown, and just going down trending. So the next support would practically be only around, where you have it, around the previous breakout zone of this, like 16, right? Like 1600. And that's what I'm expecting. It's looking bad. It's looking bad for altcoins. It's looking bad for XRP. That's it. Okay, guys. So I appreciate very much your time. I hope you enjoyed that. And feel free always to check out our website, theburbness.com. You can get easily some free badass content. You can as well easily go and sign up for our $10 modular packages for the Burbness Bulletin. That includes 24 pages of educational content, like full technical breakdown of top performers in the burbness.com calls, or whole trading therapy, let's say, article by our trading psychologist, fundamental article about the gem, right, that people are liking very much. That, let's say, the first gem in June was Beam. I can remember it pumped something like 500%, like because it was fundamentally aligned with another fundamental catalyst, similar for Dero, that the KuCoin listing that just pumped it like 50%. And here you can easily just go and sign up for $9 for the bulletin. It's definitely best you could do while waiting for the altcoin market, right? Instead of trading bad setups, just go and educate yourself to be able to trade good setups when the time comes. And that's all, guys. Thanks for today, and enjoy. Stick to the nest and stick to me. Go and follow our FF guys on my Twitter account, for the whole team and for the valuable players for Twitter. And peace and out.